How's everyone doing? Welcome back to another episode of the Banker Next Door. I'm your host, Dr. Joe Berquist. So today we're going to talk about SARs, suspicious activity reports. FinCEN recently put out a little bit of what you would call a clarification on SAR reporting for banks. Now, this might at first glance appear to be a rather dry topic, but it's actually a very, very critical and important topic for not only banks, but even for some consumers out there to understand what's going on with SAR reporting. So a lot of this can be traced back to the Patriot Act, which got passed in 2001, which dramatically increased basically what's known as anti-money laundering (AML) and Bank Secrecy Act (BSA). Under those two rules, regulations, they basically banks had to really increase reporting of what's called SAR reports, suspicious activity reports, and CTR reports, currency transaction reports. These two reports are very critical. Now, a CTR, currency transaction report, is something that a bank has to report on anytime you go over a $10,000 threshold. Now, that could be a combination of transactions, doesn't necessarily have to be one transaction, but anytime you go over that, the bank basically has to do a CTR on you and has to report what activities you're doing. Now, a suspicious activity report doesn't necessarily have to be a specific dollar amount of any kind. It could just simply be if the bank thinks you're doing something suspicious, thus the name, or something that they think is out of the ordinary. They're basically, are prodded in a way by the regulators to basically put these reports out. Now, banks have had to dramatically increase in recent years the number of SAR reports and CTR reports, which has led to a lot of conversation around, should the thresholds, the amounts be increased on some of these reports so that banks don't have to report them as frequently? Are there perhaps more companies or individuals or something that should be exempt? I mean, there are some exemptions right now. For example, if you have a business and they're always doing, $50,000 transactions every day, like obviously, you're not going to fill out, a suspicious activity report or a CTR for something that's basically just normal everyday activity for a company. So there can be some exemptions, but for the most part, banks are still required to do these reports and really put them forward. So anyway, after that long diatribe there, so FinCEN, the Financial Crimes Enforcement Network, basically put out this press release, and then we're going to look at this little PDF with these 4 questions that they put out there. So FinCEN issues frequently asked questions to clarify suspicious activity reporting requirements. And this is from October 9th, just a few days ago. So today, the U.S. Department of the Treasury's Financial Crimes Enforcement Network, FinCEN, issued answers to 4 frequently asked questions to clarify certain requirements related to suspicious activity reports, otherwise known as SARs. By issuing these frequently asked questions, FinCEN is ensuring financial institutions are not needlessly expending resources on efforts that do not provide law enforcement and national security agencies with the critical information they need to detect, combat, and deter criminal activity. FinCEN issued the frequently asked questions jointly with the Board of Governors of the Federal Reserve System, Federal Deposit Insurance Corporation, the National Credit Union Administration, and the Office of the Comptroller of the Currency. SARs should deliver better outcomes by providing law enforcement the most useful information, not by overwhelming the system with noise, said Undersecretary for Terrorism and Financial Intelligence John K. Hurley. Compliance requires real resources, and that's why prioritization is crucial. At Treasury, we will continue to reform our anti-money laundering and countering the financing of terrorism framework to deprioritize low-value activity and direct compliance resources towards the most significant threats to our country by spying on everything that you do. I'm sorry, that did come out right. No, I wasn't. I kid. All right, so let's look at these frequently asked questions here, shall we? So here are the questions. So question number 1. SAR filings for potential structuring related activity. So is a financial institution required to file a SAR for a transaction or a series of transactions with a value at or near the currency transaction reporting CTR threshold over $10,000, absent information that the transaction or series of transactions is designed to evade BSA reporting requirements? No. The mere presence of a transaction or series of transactions by or on behalf of the same person at or near the $10,000 CTR threshold is not informational sufficient to require the filing of a SAR. Financial institutions are only required to file a SAR if the institution knows, suspects, or has reason to suspect that the transaction or series of transactions are designed to evade the CTR reporting requirements. Absent this knowledge, suspicion, or reason to suspect, financial institutions are not required to file a SAR. A financial institution is required to file a SAR for a transaction conducted or attempted by, at, or through the institution. You can tell this is written by a lawyer. At or through the institution if it involves or aggregates at least $5,000 in funds or other assets, and the institution knows, suspects, or has reason to suspect that, among other criteria, the transaction is designed to evade any BSA reporting requirement. This includes transactions designed to evade the requirement that a financial institution file a CTR for one or more transactions in currency by, through, or to the institution, by or on behalf of any person, and that result in either cash in or cash out totaling more than $10,000 during any one business days. And it goes into, attempts to evade, but I want to move on to the other questions. So question number 2, continuing activity reviews. Is a financial institution required to conduct a review of a customer or account following the filing of a SAR to determine whether suspicious activity has continued? No. Recognizing the burden that continued SAR filings on the same customer or account place on institutions, FinCEN suggested in October 2000 that institutions file a SAR for repeated and ongoing suspicious activity at least every 90 days. Over time, this suggestion has become interpreted as a requirement or expectation that financial institutions conduct a separate review of a customer or account following the filing of a SAR to determine whether suspicious activity has continued. A financial institution is not required to conduct a separate review, manual or otherwise, of a customer or account following the filing of a SAR to determine whether suspicious activity has continued. Financial institutions instead may rely on risk-based internal policies, procedures, and controls to monitor and report suspicious activity as appropriate, provided those internal policies, procedures, and controls are reasonably designed to identify and report such activity. Now, again, this is where we get into the very subjective nature of this, provided, those policies and procedures. Well, if I'll put it this way, if nothing happens, nothing ever goes wrong, or no criminal activity ever gets reported or discovered, then you're good. If something does happen, and you weren't reporting this stuff all the time, and again, this is what gets back to why banks are filing so many SAR reports today, because again, they're so paranoid, especially with what happened with TD Bank. I mean, TD Bank got nailed with a $3 billion fine for not doing this stuff. Okay. This is why, and then the regulators have gone nuts on a lot of banks around the industry, really chomping down on this. Although it's very interesting that, that the big banks, TD Bank, Wells Fargo, Bank of America, JP Morgan, they got, Chinese gangs and stuff running, millions of dollars of money through their accounts. And yet they don't ever seem to get tagged for a lot of this stuff. Very, very interestingly, I just thought I'd point that out. Question number 3, continuing activity reviews timeline. What is the timeline for a financial institution that elects to file SARs in accordance with FinCEN's continuing suspicious activity guidance? As noted in the prior frequently asked question, FinCEN previously suggested that financial institutions report continuing suspicious activity via a SAR filing at least every 90 days. Subsequent FinCEN guidance advised financial institutions to file SARs for continuing activity after a 90-day period, with the filing deadline being 120 calendar days after the date of the previously related SAR filing. However, financial institutions are not required to do so and may instead file SARs as appropriate in line with applicable timelines. For institutions that elect to file SARs in accordance with FinCEN's continuing suspicious activity guidance, below is a timeline in which a financial institution files a SAR with an identified subject and determines that suspicious activity has continued. Day 0, detection of facts that may constitute a basis for filing a SAR. Day 30, filing of initial SAR. Day 120, end of 90-day period. And then day 150, filing of a SAR for continued suspicious activity. So again, very interesting stuff here. And then finally, the fourth question, number 4, no SAR documentation. So is a financial institution required to document the decision not to file a SAR? No, there is no requirement or expectation under the BSA or its implementing regulations for a financial institution to document its decision to not to file a SAR. FinCEN has previously encouraged, but not required, financial institutions to document the decision not to file a SAR. Should a financial institution choose to document its decision not to file a SAR, the level of appropriate documentation may vary based on the specifics of the activity being reviewed and need not exceed that which is necessary for the institution's internal policies, procedures, and controls, which should be risk-based and reasonably designed to identify and report suspicious activity. In most cases, a short, concise statement documenting a financial institution's SAR decision will likely suffice, although a financial institution may consider more documentation to explain the factors that the institution considered in reaching a SAR filing determination in more complex investigation scenarios. Yeah, this is really tricky because I know that they're saying on here that no, a financial institution is not required to document the decision as to not to file a SAR. Again, this is a tough one because I know they're saying that. It's just been my, it's been my experience that doesn't hold water. Okay, that basically, if you're sitting there with the FDIC or the OCC or the state regulator and something popped up and you didn't file it, and it was like, well, why didn't you file it? Now all of a sudden, you better be able to put some kind of documentation out there as to why that you did not file that SAR report. So again, I know they're saying it there. I'm just saying that, and maybe this will change a little bit over time. I don't know. We'll have to see. But I find that this very interesting, and consumers should find this very interesting because this is what banks do. And remember, a bank is not allowed to tell you. A bank employee is not allowed to inform you that a CTR or a SAR report has been filed against you. If the bank employee discloses that, they get fired for that. It's literally that serious. They are not allowed to disclose these things to you. If you ask them point blank, like, oh, hey, I've got a number of transactions here. This all adds up to $12,000 in activity. Are you going to file a CTR on me? They cannot answer that question. They are not allowed by law to answer that question. So they cannot tell you when they're filing these things. They basically just file them and off they go. So if someday you get a knock on your door or you get a phone call from somebody at an FBI office or something asking you, hey, what was you doing, or what was going on with this? You'll know why. It was because your bank filed a SAR report on you. Again, like I said, I find this stuff like very interesting. Again, I've been a big advocate over the years for, trying to calm this stuff down. I mean, I guess I look at it and I say that, that on the one hand, you're trying to prevent crime and fraud and the suspicious activities and stuff like that. But I ask very practical questions. How many times on the news have you seen, oh, the bank foiled this terrorist network because the bank was monitoring what they were doing? Do you see those stories on the news? No, you never see that. The bank foiled this drug operation. The bank worked with the FBI to foil this and foil that because they found all these guys were laundering all this money. No, you don't see those on the news. And it's not to say that those things don't happen. They do happen. And sometimes there's good reason for them to happen quietly, as opposed to being out in the public eye. But I'm just saying it's kind of like the TSA. What has the TSA done at the airport? Have they cracked down on, have they caught a whole bunch of terrorists at the airport with all the TSA stuff? No, absolutely not. So, and I think it's the same thing here. And I think that there are aspects of the Patriot Act that were good. I think that there was a lot of aspects of the Patriot Act that have led to a lot of abuse over the years. And I think that this is, I think that BSA and AML is one of those things that started out maybe with the right thing in mind, but I think in a lot of respects has turned into a very abusive system, that basically is just there to monitor every little thing that every U.S. citizen is doing. Maybe some people feel differently. That's fine. That's just kind of my take on it. Again, I'm an advocacy for privacy. I don't think Uncle Sam needs to know or has a right to know every little thing that you do every day that you do it, especially if you're just a normal, everyday, law-abiding citizen. If you just going to working your job and going home and paying your taxes, as most people do, you don't make a lot of money. You're not some multimillionaire. You're not whatever. Like, again, government doesn't need to know how many times I go to Walmart every month. All right. Anyway, so all right. That being said, I'll wrap this episode up by saying if you like this episode, please make sure to like, share, and subscribe, as that always helps the channel. Remember, we are on YouTube, Rumble, and all major podcast platforms. Please be sure to leave your comments down below. I'd love to hear some comments on this one in particular. And as always, make sure to check out some of the other content on the channel. I hope everyone has a great day out there. I will see you again real soon. Thanks.